Today, we're in the state of Illinois. How to find the right home equity line of credit in the second position. I've had quite a few of you in the comments requesting for Chicago, state of Illinois, and good news, Illinois came to play. I found no shortage of healthy, reliable banks that offer a home equity line of credit in the second position at really good rates, really good offers, everything that matches my fundamentals. Illinois is one of those states that are pretty competitive, quite a few banks. There's also federal banks that cover that state that we're going to dive into in this video. So with that being said, let's start with the left-hand side of the board as usual. This is our framework. These are the questions. These are the facts. These are the data points that we're looking for on these websites. And when we call the bank directly to confirm the information that we're seeing on the website before we ultimately apply for that HELOC. As of 2026 in February, the prime interest rate stays at 6.75%. We just had a Fed meeting a few days ago towards the end of January, and they did not increase or decrease interest rates. They kept it right at 6.75%. That lets you know about where you should be aiming to have your home equity line of credit rate be at, preferably, especially if we're dealing with a second position home equity line of credit. With a first position, those work a little bit different in terms of how the rate is determined. But as it pertains to second position HELOCs, this is your North Star, so to speak, right? This is where you're identifying a great HELOC from a inefficient HELOC from just an interest rate standpoint. All right. So be sure to go through this credit score, DTI, LTV, closing costs, right? Keep it low, $500 around that number. Does it have an intro rate? This is the range that we're seeing today. How was my rate calculated? This just helps verify if I'm going to have a prime rate. So when you ask the bank this question, how is the rate, how is the interest rate determined? And they'll say we do a prime flat, or we do a prime plus a margin. Anything that's prime plus a margin, you're going to be above 6.75%. There are plenty of banks that are right at prime or prime minus. Now, there may be some states that are not competitive. And at most, I really don't want to be 1 point above prime. I want to stay as close to prime as possible. Usually I'm able to help, my clients and you all that are watching really stay close to prime or prime minus. What's the draw period? 10 to 20 years is your average. Make sure you build a relationship, become a member with that bank before you apply, open up the checking and savings, move your banking over, especially if you're going to be doing this strategy where you're going to be parking all of your income into the HELOC to accelerate the debt, right? To accelerate the pay down, and you're going to be replacing your checking account with the HELOC. Ideally, you want to have all that set up in advance. You want to have your bill pay all set up, your auto pays all set up, the credit card that you use to run bills. You want to have everything set up before you actually apply and activate the HELOC, so that this way, when you have the HELOC in hand, ready to go, you're able to accelerate with velocity. Make sure, in addition to building a relationship with the bank, make sure that they have an active functioning mobile app. This increases velocity. And lastly, this is just verifying that I'm applying for a home equity line of credit, not a home equity loan. Making sure that my payment is a revolving line of credit with interest only payments, or principal and interest payments. Make sure that's the case. When deciding, do I do interest only? Do I do principal and interest? I always get that question over and over again. I always say the same thing. If there's no incentive to go with interest, principal and interest payment, meaning, let's say you had an 80% LTV, great credit score, and if you keep the loan to value at 80% or under, go with principal and interest payments, you're going to get an intro rate of 12%, of 12 months for an intro rate at 6%, let's say. But if you do interest only, then there is no intro offer. Sometimes banks do that depending on the LTV and the payment option. So if there's no incentive, feel free to pick either one. Normally, from the perspective of not only leveraging the debt, leveraging the line of credit, I think it's healthy to have a principal and interest payment. It just kind of forces you to pay it down versus if you're not going to be as disciplined, an interest only HELOC might give you too much flexibility and you forget about the HELOC. Maybe you change your strategy, becomes an investment strategy. Things can happen, right? So you be mindful of who you are as an individual. What is your capacity to leverage debt? Can you handle it? If not, probably want to stick with the principal and interest, and more often than not, you're going to be rewarded for that option anyways. So with that being said, let me share my screen with you, take you through all the research I did, all the banks I found. Like I said, no shortage. This is what I do. Credit unions in Illinois that offer a home equity line of credit. And this is, AI gives me a list of banks. I scroll through this whole thing. I go to page 2, scroll through the whole thing, find all the banks that I may want to do business with. And here we go. Not every bank that I found makes it to the whiteboard. So I'm just going to fly through all the banks that do offer a home equity line of credit. So some of you in the comments are like, I can't find a bank. I can't find a bank. I don't even live in your state. And I found so many banks. So it tells me one thing. You're not watching the content. You're not being patient. You're being impatient. And you got to work on that. That's a personal thing. You got to work on that. Patience. Takes a little bit of research. Home equity line of credit, be very specific. Just use that line right there. And if you live in Illinois, more banks are going to pop up than what I found. So like I said, there's no shortage. You have Alliant Bank here. They cover multiple states. They have HELOC, interest only, 7%. So that's prime plus 2.5. That's the only reason why they didn't make it to the board, because I found other banks that are more competitive. For example, Consumers Credit Union, 4.74% intro, 12 months, rate as low as 6.25. BCU, rate as low as 6.25. Broadview, we have 0%, 3.99 for 12 months. This is honorable mention, Credit One, Prime, flat. Not bad. First Trust Bank of Illinois. Didn't make it to the whiteboard because I didn't have enough information, but it does say no annual fee. Adjustable rate, you'd have to call, find out what that rate would be. Tech Credit Union, no closing, no appraisal, no app fee, $350K max, 10-year draw, interest only. Introductory rate for the first 5 months. on the new Flex Equity line. So it's got a 5-month intro rate. It says the prime was 7%. I don't know why, because prime is 6.75%. So they need to update that. But it does say prime rate plus 1.5%. That's the only reason why I didn't make it to the board. But they have that 3.99 for the first 5 months. That's a teaser, but it is going to cost you. If you're someone that's looking for a bigger credit line, that's where tech might be favorable. We got Great Lakes. Wasn't able to get too much information off of them, but they do have a HELOC. You got DuPage Credit Union right at prime. Look at this. Up to $1 million. 10-year draw. Not bad at all. I would throw them. Honestly, I didn't put them on the board, but after seeing that, that's board worthy. So I'll definitely throw them on there. So DuPage. Yeah, Bank of OZK. I've had quite a few people use this bank before. They have a nice intro, but keep in mind that's prime plus 0.5%. So keep that in mind. Then you have Green State Credit Union. They had a 6.49%. Where did I see it? Down here. Now you gotta pay close mind. 6.49. That was worthy. Healthcare Associates. So for my healthcare workers, this is a specific bank just for you guys. They go up to 500K max, no closing costs, 10-year draw, no app fees. The interest rate I saw was 6.54%, so slightly below prime. You have UW coming in at the lowest intro rate of 3 months, 0%. If you borrow up to 200K. If you go past 200K, 3.99 for the first 6 months, then it's prime minus 0.5. No closing, no annual, 5-year draw. That's the only drawback. It's a short-term HELOC. Then we have this bank here. Not too much information though, but they do offer home equity line of credit. Okay, let's take it back to the whiteboard and review some of the details, the most attractive banks that we both saw together. And then I'm also just going to throw the DuPage because they go up to 1 million max credit line. That's literally the only reason. The rate is prime. We got a 10-year draw. So everything else pretty standard. Don't know about closing costs. I would imagine there would definitely be some closing costs on that. So top picks. Most attractive banks I saw in the state of Illinois were Consumers Credit Union, Broadview, which is a federal bank, so they do cover multiple states, and then UW with that 0%. That's pretty attractive if you don't need a big HELOC. Keep it under 200K, 5-year draw. That's the only drawback. You can always renew the HELOC. That's what I tell people. So I'm usually not that crazy about the draw period because for sure, if we do everything according to plan, 5 years from now, you would have paid off so much debt, your credit score would have gone up. You got even more options to work with. So you could hop to a different bank if you wanted, or renew it with them to retain your business. If you're a healthcare worker and you want a bigger credit line, Healthcare Associates, plus you can go up to 85% LTV and still be below prime, no annual fee, 10-year draw, mobile banking friendly. Not bad at all for my Illinois residents. So put that in the books in our series here, how to find the right home equity line of credit in second position. My name is Denzel Rodriguez, your personal finance geek of the 21st century. If you're looking for consulting, coaching, one-on-one work, you can click the link below in the description or in the comment section to get a hold of me. And you can view other services along the way that bring everything together. This is usually at the beginning workings of your personal finances for those of you who are in a lot of debt. You're trying to restructure debt, you're trying to accelerate debt. More often than not, a home equity line of credit can be an extremely valuable tool for some of you homeowners that acquired a lot of debt in the last 5-ish years at higher rates. Now we're seeing rates come down. Getting a home equity line of credit, it's secured debt, so you're typically going to get a better rate. And like I said, if you follow my fundamentals here, you're setting yourself up for the optimal success over a long period of time. You're going to be very competitive in the marketplace, really setting yourself up to save more money, cash flow more dollars, invest more money later on as you build that financial foundation in a strong base. So with that, have a wonderful day. God bless, and we'll be talking soon.